Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap session for Friday, October the 13th, 2017. My name is Doug McKay. I am the founder of Quantum Leap Futures. Each morning we get together in the live go-to sessions, take a look at the market, macro to micro, take a look at the structure of the market. Then we drill down to our trade levels, our targets, and we set up our trade plan, or trade plans, I should say. We do create multiple plans in order to have a plan in place. We do not try to predict the market. We look at the auction, what the likely rotations are going to be for the day, and then we devise multiple hypotheses or plans in order to have a plan in place, wait for the market to open up, and then we can execute the plan that best suits the market. This is a subscription room. If you're interested in checking it out, send me an email at quantumleapfutures@gmail.com. There's no website, there's no blog. This is not a commercial venture. We do everything live here in the go-to session during the pre-market, and then we do live trading and analysis during the course of the trading day. There's close to 700 days of these pre-market sessions up on YouTube, so please subscribe to my YouTube channel, Quantum Leap Futures, and of course, if you're here, you're following me on Twitter, please like or retweet if you see my tweets, please. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. So taking a look at yesterday. Oh, I forgot to open that up. Sorry, let me just go grab that. Yesterday, our main hypothesis was a tight rotational day. We are looking for rotation down into the 49 to 46 area, and then we were looking for responsive buyers to step in and rotate us up and go and break that all-time high that we put in at the prior day, which was a week all-time high at the 25.53.50. Hypo 1 was playing out beautifully, and we put in this double top, also confirming that we're likely to break the high. And then the auction, as we were talking in the live room, we were talking how something was bothering me the whole day, and the fact that the volume differential was not showing that this market had the strength to move and break that all-time high, and to break that double top at 53 1/4. And then we were looking at that those two opposing pitchforks and how we dropped out of the upward sloping and we were following the downward sloping fork. And so we took the short into what I was hoping was going to be moved down to the key line in the sand. We did not break out of the prior day range, and that was basically the completion of Hypo 4. Hypo 4 was a open auction in range and an inside day and a failure to break out. We did create a double distribution day. Now, last night I mentioned, and I've talked about this in the past, we had a trade setup. It wasn't a trade setup, but it's something that I look for that has a very, very high probability, and it's called the Globex Gap Trade. And Peter and I traded it last night. And what this actually has, and we've done a large sample size on this of over 2,000 days. Hold on a second. My computer is still messing up on me. We've had a large sample size. This is over 2,000 days, and I had a friend of mine run the stats on it. I didn't actually run the stats myself, but I trust this gentleman's work ethic and his statistical probabilities. And he came out with a 99.8% probability of this market. I call it a market phenomenon. You can call it a trade setup. It's sometimes not able to be traded, but it's called the Globex Gap. And when we close after the extended trading session at 5 o'clock and then reopen at 6 o'clock Eastern time, sometimes we get these gaps. And they're not usually big gaps. They're usually only a tick or two. And a large percentage of the times they are closed very, very quickly within the first 5 minutes. But a lot of times they'll give you an opportunity to build a position and get in. And basically the concept is when the Globex opens above or below the close of the ETH session that just closed, there's a 99.8% probability that the gap is going to get closed. So you start looking for trades and building a position into the close of that gap. And this particular one, we closed at 48.75. The target on the trade is one tick in front of that close, so you're targeting the 48.50. Of course, if you've got runners, multiples, you can leave runners on. But here we are, we opened up at 48, so we left the 3-tick gap. And then we went down to the 47.50, and within the first 30 minutes, there was time to build a position and actually build some Theo in order to hold and get that move to close that technical gap. This is one of my favorite trade setups, and this is very, very. I call it free money because it's so probable that it's going to happen, and you can have the confidence to build the position towards that. It's like the intraday gap we were talking about the other day. Anyway, I wanted to share that with you because we've got some newer members in the room, and when you get a stat that is so phenomenal like that, it's something that you want to make sure that everybody understands it and can watch out for it. Now, I've only tested it in the ES. I have not tested it for other markets. So bear with me. You'd have to do your own statistical probability. Anyway, let's take a step back and start getting set up for the day. So let's take a look at the news. Of course, this was a good news event. I actually traded this event both in the ES and in the gold, and I got long on ES at 52.75 for the break into new all-time highs, and then I got long on gold at 12.96.30. I'm actually still running one long in gold because of the fact that we're back into the 1300s, and remember our target on the 1300s for gold, the next big target is still above. I believe it's at 23, but we'll get into that in a minute. Anyway, we had core retail sales. We had core CPI come out. CPI came out at 0.1 versus 0.2 as expected. Came out at 252.86 versus 253. CPI index NSA came out at 246.82 versus 246.94, and retail sales came out at 1.6 versus 1.7, and retail sales in gas and autos came out just slightly better. So it was kind of a bit of a mixed bag. It wasn't bad, but it wasn't really good, but it was enough to ignite the market into new all-time highs. We now have an unequalized all-time high in the Globex, and we'll talk about that when we get a little bit further. In terms of news, we do have a fair amount happening today. We've got business inventories, we've got Michigan consumer sentiment and expectations. We've got inflationary expectations. We've got ECB talking at 10:15 today, and we have to pay attention to the ECB right now, as well as another Fed speaker, Evans, at 10:25. We've got ECRI weekly analyzed, and then we've got Kaplan speaking at 11:30. We've got the rig count at 1 o'clock. We've got Powell speaking at 1 o'clock. We've got federal budget balance at 2 p.m. So a lot of news today. Remember, it is Friday. We're going into the weekend. You want to make sure that you keep it tight. I'm pretty much done for the day in terms of my trading. I really don't have to trade again today. That doesn't mean I'm not going to. So if we take a step back, like I always do, I always like to start my day looking at the monthly. I use my paper money. I use TOS for options only, but I love the drawing tools on it. So I use the drawing tools on my paper money with the live data. We've been following this upward sloping pitchfork on the monthly. We are in the upper channel. We do have expansion capabilities up into the 67 area. We're also in this upward weekly channel. The other thing I wanted to point out, this is the 12th month of one time framing up, and we're making new all-time highs. Also notice that we just hit that 25, 55, 50, which was the primary measured move on that zipper that we were looking at, as well as the cup and handle. And we also have the inverted head and shoulders that we're still waiting, and that primary target is 56 and a quarter. So that is still out there as well. So still have some good targets to the upside. Very, very strong trend on the monthly. Same thing on the weekly. What I'm usually looking for in terms of strength of trend is the slope and separation on the 9 EMA and the 20 SMA. Those are the two moving averages that I use on all my charts. And we're looking to see how good price is paralleling 9. Is it creating a technical gap, moving away too quickly? Is it coming down and challenging the trend by testing the 9 or breaking the 9? And is it violating the trend by breaking through the 20? And you can see on the weekly, the trend is very much still upward. Our upper channel on the weekly is up here in 2580. I do have another measured move up to the 2575. I'll talk about that in just a minute. Going down into the daily, you can see prices paralleling the 9 nicely, kind of losing a little bit of momentum, but this is a pretty parabolic move for these days right here. Price doesn't even start to challenge the trend on the daily until we get back into the 2543 area. Remember, that's going to be our key line in the sand, as it has been for a few days. Going to the intraday, you see that we were just in this. We were talking about this the other day, and this is the. Oh, I can't talk right now. Hold on a second. Let me take a sip of my tea. This was the inverted head and shoulder that we were watching, and its primary target is up here at the 56 and a quarter. But you can see that we've gone a little bit parabolic on the news, going down to the 30-minute. We are creating some FUBAR Mr. Sneakies on multiple time frames, so it'll be nothing for this to come back and test the 52 area, return to the scene of the crime. The open and the scene of the crime is at 5250, so I'd be looking for a possibility of retrace back there. Going to the 5-minute, you can see we just completed the FUBAR Mr. Sneaky. There's the FUBAR, okay, pulls away too quickly with a huge volume spike, creates the technical gap, then we get the Mr. Sneaky, and then we get the retracement back down to close the technical gap. And that's a classic FUBAR Mr. Sneaky tech gap. So everything is still very strong. The trend is very much intact. When we take a look at the structure of the market, we've got this 6-day profile right now. Our microcomposite VPOC is sitting right there at the 48.75, 49 area. We've broken out of value above the 50 and above the prior all-time high, and we've gone, and now we have an unequalized high. What is the high that we put in so far? So 55.50 is our all-time Globex high, and if you go back and do the analysis on this, we talk about these unequalized highs. When you put a all-time high in the Globex, that it has a high probability for the market to go up into that on the RTH session. It doesn't necessarily have to be the session after that all-time high is put in the Globex, but it does have a very high probability to be taken out. You can see here on the Renko, as we talked about earlier, we got that zipper measured move that was never violated, and we just hit that target at 55. So we're hitting a whole bunch of these targets that we initially talked about. Key levels to keep an eye on today is obviously the 53.50, which is our prior all-time high, but I would really be watching this 25.50 and a quarter. And if we get back in balance, that's going to give you an opportunity to get short into the 48.75 area, maybe a trip through yesterday's range. It was a doji day, but this news and this move to new all-time highs in the Globex has kind of changed my my main hypotheses for the day. So let's take a look at the Globex numbers. Our Globex is basically about 70% net long in time and value. We've got a very toothy profile. There is some repair work to be done between the 53.50 and the 50 area. A move back to yesterday's midpoint is going to take us to 51 and a quarter. And of course, we've got that lower distribution. I'm sorry, yesterday's midpoint is 49.75, and we got that double distribution. So you want to pay attention. I talked about that. I said 50-50. 50 and a quarter is the LVN from the double distribution, and also that value area high from the microcomposite. So anything below that, I think would go and test the VPOC from yesterday. We did accept that value from yesterday. The VPOC is basically accepted overnight, and then we've gone into price discovery, and we are in price discovery right now. For those that are new, this setup right here, which I call a FUBAR, which is a very strong move with high volume, and then you get the inside bar. This we call this trade setup a FUBAR, Mr. Sneaky Tech Gap. I actually have a YouTube video that you can watch on my YouTube that explains these trades. It's a funny name, but it's one of the highest probability trades that you'll come across, and it can be used across multiple markets, multiple instruments. I'm not going to get caught just talking about that. Let's get our trade plan set up for the day. So our overnight high is up at 55.50. That is also our Globex all-time high. So that any targets above the 53 and a quarter, that's our main primary target today. Our 20-period daily full session ATR is running at 10.79 right now. So off of the low overnight of 47. Oh, sorry. What was it? 47. 47 plus the 10.79. Our upside daily ATR target is at 57.75. And off of the new all-time high put in overnight, our downside daily 20-period ATR target is shifted to 44.75. So we've got range capabilities without going beyond the average true range of 47.75 up to 57.75. And we're currently trading just outside of yesterday's range. Our VPOC is not likely going to change. It's down here at 48.75. Just one tick below the prior day VPOC. We have an LVN at 51.75 in the Globex, but the one that I'm going to pay attention to is this one right here at the 50.25. Why? Because of the fact that it puts us back into testing the value area high of the 6-day microcomposite value area. So that's going to be basically an over underline for me. Whoops. We're just setting up our levels, and then I'll go through the trade plan hypos. And then obviously the prior all-time high at 53.50. The value area was valid yesterday, but I'm not going to use the value area high because I'm using the microcomposite value area high, but I am going to use the value area low because that is also one tick below our daily downside ATR. So if we do break below that, I'm looking for a break of the 46.25 and targeting that key line in the sand down at 43. And then all our levels remain the same. We still have gaps. We've got a lot of repair work to do below us. But this, to me, is starting to act like a island top and a possible blow-off top for the next leg back down. And I keep talking about having to come back and get stuck. We're likely to get stuck between this 38.50 and this 25.09 for a period of time as we mature the auction and explore price acceptance and rejection between this thin level on this parabolic move up. So in terms of, excuse me for 1 second. Sorry about that. So in terms of hypotheses, we still have almost 15 minutes, and we're likely to come back into the prior day range. But right now, if we open up where we are, we have an open auction out of range. Our hypos aren't going to change much. We're looking for responsive selling down into the value area and down to the 49 area. Between the 49 and the 46, I'm expecting the buyers to step back in again and rotate us up and continue this price discovery. Our main target above is the 55.50. So hypo 1, open auction, just in range but out of value, or just outside of range and value. A move down to the 49, possibly even to the 46 area, but somewhere down here, finding initiative buyers and stepping in and pushing us up into equalizing the all-time high up at 55.50, and then possibly a push up even further to put in new highs, chop, and then fall back and come back in towards the 49 and closing somewhere between the 53, 54 area and 49 area. Not expecting a lot of range again today, although we do have a lot of speakers from the Fed So we have to be on the lookout, but it is Friday, and we have had a pretty large move. Hypo 2 is just going to be slightly opposite. It's going to be an open auction, just in range or just out of range, a push up into equalize that all-time high, a push through, and then somewhere between the 55 and the 58 area, finding responsive sellers and rotating us down, chopping at the 53 area, and then failing and pushing down and targeting that 49 as the primary target. Maybe even a late day probe down into the 43. But I'm thinking we're going to base and go sideways here today, if not go into price discovery further up. So Hypo 3 is that price discovery up, and that is an open test drive, and that is a move down, failure to get inside the value or inside of the prior day range, so rejection of value or range, so somewhere between 53 and a quarter and 51.50. Find buyers, rotate us up, take out that all-time high, equalize the high, chop between the 57, and then base, and then go and hit our targets. We've got a target at 56.50. That is the inverted head and shoulder target, and I now have another target at the 75 area. I'm not going to get into it right now on how I'm measuring this one, but I do have it. I'll talk about it in the live room. I just don't have a lot of time. I don't want to make these sessions really long. And the fifth hypothesis is a failure to take out the all-time high, come back down, and then sit in sideways and just go sideways between the 53.50 and the 47.50 area, and that would be my Hypo 4. The alternative is a breakdown day. It's got a low probability on it, but it would be failure to take out that all-time high, move down into the 47 to 49, chop, and then fail, come down, test this key line in the sand, and then fail that, come down into this 38 to 36 area as a big take back day. It's unlikely that's going to happen, but it's something that we do have to be prepared for. So that's why it's our fifth or alternative hypotheses. So those are my main hypotheses for the day. We do want to take a look at gold. We were looking for gold to base around that 75 to 63 area, and we did exactly that. We've been talking about this. We failed to hold into the 1300s, and we went down. We went back to the composite VPOC. We said if we would likely base around there, but if they didn't hold the 75 area, look for them to come down into the 63 area and find buyers down there like they did before, and then start the move back up into the 1300. So we've moved into the 1300. The next key level, the key target on gold is up here at the 1312 area. So right now we're trading at 1303. We'll probably come back and test the 1300 again. If we don't hold the 1300, the target is going to be the 95, 96 area. And if that doesn't hold, back down to where we've now accepted value again around this prior value at the 1293 area. Very, very good auction in gold the last little while, hitting all the key numbers, doing exactly what it's supposed to do, unlike what the ES has been with this grind, this crappy grind. If we can get above the 1304, I'm looking for them to push through to the 13087. I'm still running long a single from 1296.30 on the news, and hoping to get a big $15 run. Haven't had a good one And this is turning out to be a really good one for me. Anyway, that's going to complete our pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side. I'm going to go